traders, welcome to the TMT Stock Market Strategy video for Monday, August 15th. Well, can't believe that the summer is just about over. We got a couple more weeks, 3 more weeks left of the summer doldrums of trading, which I can't wait until September comes along. It's going to be very interesting to see what happens in the next few weeks and going into September, October. Markets have extreme complacency. We all know that. And by the way, mind you, for those of you that follow me, you guys know that I'm a trend trader, so I could care less if it's a bull or a bear. The only thing that really bothers me, in essence, is that when we have very quiet trading and the markets really don't do anything and they just kind of grind higher or stay stagnant for many, many weeks, which we have seen since July. There's very little opportunity, very high probability trading. So there's a lot of sitting on your hands and waiting, and that's the only thing that kind of disturbs me a little bit. Other than that, I could care less if the market continues to go to 2,300. Just let the markets move a little bit so we can take advantage of that. And when the markets, move right on the opening and then does nothing all day, and that's what we've been seeing of late. So it's a little difficult, a little annoying for someone who wants to trade. And that's where a lot of the people get in trouble. A lot of the traders get in trouble that are active, that want to trade. They feel like they have to. And you do not have to. So just kind of keep that in mind, all right? It's very, very important in this low volatility environment that we're in. But I do think that I think the risk is going to be to the downside. I think that you're going to have a move out of this. You see these Bollinger Bands. We've been talking about this for weeks and weeks on end. I haven't seen a Bollinger Band pinch this closely with positive divergence on the MACD, RSI, CCI, and indicators in quite some time. So watch out, guys. I mean, even if we were to pop out of this again tomorrow, tomorrow, I still think that the risk is going to be to the downside. I think you have a big, big move. If you looked at the pattern back in April, which was right around, in August again, right around here, you could see similar pattern in the VIX where we had a move lower all the way down and then this big explosive move. And remember, we are going to need a catalyst, because with no catalyst, the markets will continue to grind higher. Nobody has any interest of selling the markets at these elevated levels, which is absolutely crazy. And I don't mean the retail trader. I'm talking about the fund manager, the hedge fund manager. Q3 is going to end in September, at the end of September. So I'm sure they're looking to go lock in some profits if in fact something does change. Now remember, nothing has changed on the Brexit vote, and the markets just continue to move higher. Aside from some more QE from the ECB, which they had a failed bond buying purchase last week, and that's just something of trouble that's going to be happening with the central banks around the world. It will happen. It's just a matter of when, obviously. All right, let's take a look at the NYUD, advanced decline with volume. This is one in my model. We have, just speaking of the model, we're still 50-50, leaning more bearish every day. We need a few more things to change, and then that would put us back on sell mode. But right now, we're still neutral to slightly bearish. Just wanted to get that out there. All right, NYUD, you could see here, we have negative divergence that has formed on this breadth indicator. As markets move higher, we are moving lower. Okay, and remember, these spikes up, like when you get, that's fine, but we need to hold the spikes. You need to hold the spikes by going, maybe trending sideways or even holding at these mid-range levels and then move back up when you do make new highs. That did not happen. So we're back down below again. So this is a very reliable oscillator, measures good breadth of the markets with volume, and this is not doing anything. So this is something to be concerned about. All right, take a look at the VIX, which we did go through. Let me just show you gold. Here is a picture of gold. We had a clear reversal on Friday, which was pretty amazing. That's something that I'm watching closely, the gold markets, because this is something that if the equities aren't doing anything, go to another asset class, try to find something. But even gold hasn't been doing much of late. You could see here we just elevated at these elevated levels. I have no desire to buy gold here at the areas of resistance of 1380, 1350, 60. If you have a couple of points to the upside, I'd rather be a better seller in the short term. Back down to, if we reach this area of 1340, to me, I think gold goes back down to 1320 and then ultimately 1300, and then we would reevaluate it. But I'm looking at a 2060 to 2080 and then 1300 to downside targets. That's going to be the buy-in for gold. Okay, so keep that in mind going into this week's trade. Just want to show you GDX. We have some negative divergence here. We did have a clear reversal candle. Now, um, it's only going to be a reversal candle if we take out this low from Friday. So Friday's low in GDX, keep an eye on. It's going to be very important. I believe the 38% and ultimately the 61.8% are going to be two target areas that I'm looking for. First is going to be that right here. That's going to be 26 bucks. Um, I'm sorry, 29 bucks, and that's going to be the 38% retracement. And then we lose that uptrend line. I think you get a good flush right down to 25, and then you can start reevaluating. We do have a gap area here to still fill, so just keep that in mind. But let's take it one step at a time. I think GDX, you can start selling rallies in GDX if and only if we take out $31 in GDX. GLD, just want to show you the GLD, the ETF, same thing. You can see momentum waning, not looking too pretty. And again, first target will be the 38% of 25.50. And then we have an M-top formation here. As you can see, I've been mentioning that um, for the last couple of weeks, excuse me, right here and here. Here's your M-top. And then if you remember this area here, this is the measurement. It goes down to 120. 120 is going to be a nice area to buy if we can get in that area. Remember, gold doesn't act this way for no reason. If we have some extreme pickup in volatility, you're not going to see that. Gold will get bid up again. All right, I want to show you the rates. Let's take a look at 10-year. This is the yield. I showed this inverted head and shoulders pattern. We did break out of it. We're back testing it now. But remember, 160 is going to be the area. One spot, 60. We need to break out of that, back test it, and I think we're going to see the 200-day hit. That's going to be the first target. TLT will take a big hit to the downside. If you don't have the 10-year yield, you can look at the TNX. It's the same thing. You just divide that by 100, and you'll get it. You'll get the same yield. Here's the TLT. And I'm actually waiting closely here. We are right down here. We have lower lows, lower highs. We have an M-top formation with a descending triangle. Neckline coincides perfectly with the 50-day moving average, which comes in at 137.68. That's the area that needs to get taken out, the neckline, for the move back down to this trend line here at 135, and then ultimately the 200. But if it does not, I wouldn't mind being a seller at this local swing high here, and hopefully that fails, and then we look to really short and then add down here. So I'm watching the TLT closely as well as gold. All right, spiders. I'm not an Elliott wave guy at all, but I do like looking at 3 waves and 5 waves in an uptrend or a downtrend. And I wanted to show you what we found at TMT over the weekend. We have 5 waves here complete. Is this complete though? That's the problem. We don't know if the 5th wave is done yet. All right, but you could see 1, 2, 3, 4, 5 identifiable wave patterns. So we're on our 5th wave now. I think it's just a matter of time to complete this 5th wave to actually move lower. Okay, guys, something to keep an eye on here. You can put these on your charts as well. 60-minute, just want to show you we have some negative divergence that are forming again, yet again, right here, and you can see here that's that resistance area here, 60-minute. Okay. Next is going to be the IWM, and I'm showing you some of these zones because I want to show you these are what we give you on our premier videos. Along with actionable, we drop it down to a 15-minute chart. We give you some excellent trading zones where price has touched, and it's all based on our algorithm. So something that you should take a look at. $49, you can't beat it, guys. All right, IWM daily, 121.60 still holding true here as resistance, and then we have this area down here, and then you have these other local areas. All right, let's take a look at the overlay. Haven't showed this to you in a couple days. Nothing really has changed. Transport's really making lower lows and lower highs. So this is not a good sign. Eventually, this will hold. If transports really start to break lower, Dow's going to pull it down with it. Okay, even though it made new highs, transport's not even close to making new highs. So this is definitely the canary in the coal mine to be watching. And you can see here, if we lose the 200, fund managers will definitely take note of that. So just keep that in mind. And where there's no selling, a lot of the bigger traders are not around, as you can see. And you can see this crazy uptrend channel that I put out, and this one 1630 will still hold true as support. Okay, so just keep an eye on things today, guy. Quick recap where there's not much trading going on. Take a look, try to look at some other markets, some other stocks. But the indices continue to grind higher into new highs. So I'm watching closely for any reversal clues, which I do have, and I showed you some. But that doesn't mean I'm looking to go short the market. Now, listen, if you have a large account and you want to start nibbling short, you can. You just got to identify where your stops and how much money you're looking to risk. All right, guys. Have a great day, and we will see you tomorrow.